Hi, everybody. Good morning. Let's wait for a minute as we wait for people to join. Hello, and welcome, everybody, to yet another session of Beyond Bulls and Bears. Thank you for taking out your time and listening to this video where we share the weekly development and view on the markets. What a pleasant week it was. Markets up more than 4%. Our portfolio up more than nearly 6%. I think it's worth a smile at least. So, what changed the market? Why this broad based rally all of a sudden in the middle of this gloom and doom? Broadly, I think if one word I have to summarize for the reason of change, it is just the sentiment. Nothing has changed fundamentally overnight during the week for this kind of a positive movement into the market. While there have been some developments around the US market, which were slightly negative in the nature, but we will cover that in the news segment of the podcast. Let's understand what changed the market, because that's the topic we are going to discuss today. So, the first thing which changed the market is buyers are back. The sentiment is better. The technical support which we took initially at 21,800, 22,000 held, and we closed last week close to the 80 EMA, and the fact that the market opened and steadied over the 80 EMA led to some short covering. Why I'm saying short covering? Because the FI data does show that they've reduced their shorts on the index futures, and also there have been some long build up by FI. At the same time, there was a lot of people who were sitting on cash waiting for the sentiment to improve and a sense of bottom be made so that they can deploy. So they did a follow up buying. I think the third and the most important reason which is undermined is I think options. While the options volume have come down, but the trend clearly recognizes the fact that the delta hedges of the naked option sellers on the call side for Nifty and Bank Nifty came back and they did the buying of the indices, which is where the short covering happened and the long build-up can be seen. What also happened is the connotation of negative sentiments stopped as the market rebounded. It's a human nature that जो दिखता है वो बिकता है. So if markets are going up, then the voice of those who were saying ये गलत है, ये negative है, came down. That helps the sentiment because as a human psyche, if we keep hearing negative, then we also start thinking negative, and the fact that the chorus of negative stopped gave, I think, a confidence to those massive investors. Uh, has fundamentally things changed? I think the fundamental changes happened much before this week. Be it RBI liquidity, be it the government policy, be it the budget, be it the government spending. There were enough green shoots, but the market was ignoring them under the pressure of selling. Uh, Important thing is not what has happened. Important thing is what's now. And that's the question I've been hearing from people whom I interact. And what do I think will happen now? So my view is very simple, and I'll put it through a story rather than anything. Let's assume market is an individual and who got badly ill with something, let's say cancer. So what happened is the the, the person, which is in this case the market, became weak, and everybody started doubting the capacity of the market to remain healthy, and hence they started going negative on the health of the market, in this case leading to selling. The condition became so bad that the market has to be hospitalized in the ICU, if I can use the imaginary word here. And it looked that market needs attention, and that attention did came from government, RBI, which led to improvement of the health of the market. The market is out of the ICU. Market is probably, I can say, out of the woods now, but it remains out of the wood till it doesn't get injured again because of a strong sentimental negative illness. The immunity of the market, or the ability of the market to hold on to any negative, is pretty much low, and hence any major negative now will change the sentiment again. So what is important is that the market remains steady, which in our parlance should remain consolidated. So the more important step which I am looking at is what is happening on the market in terms of consolidation. A couple of percentage point here and there is going to remain the tendency of the market in this volatility. But we are talking about 4-5% movement here. April result season is a very important parameter. It's like market coming back home and how is the health once you are off the medicines. And that for me will decide the trend of the market going forward. We have maintained our view that the short term the market will remain volatile. We are not good at getting the direction right. We don't want to focus on short term because we deal with long term investors. We maintain our view, which we gave at the start of the year, that this year also investors should make 20% plus on a quality large cap portfolio. And we maintain our view. I can very proudly say that anybody who would have given us money in Jan or Feb at any level is probably now at par, if not down. And and this is with a slight up move in the sentiment. The inherent strength lies in the economy. The inherent strength lies in the earnings, and that confidence of ours was never shaken. Yes, there are parameters like global macro, Trump politics, and stuff which will probably impact the earnings a bit to a certain degree or delay it, but this doesn't change the direction of the earnings. And that for me is the biggest reason why we see what we see in the markets. Coming back to other developments in the market, I think the most important development in the market was the fact that there is a recognition that US economy may go through a certain turbulence. Will it go into recession or not? I'm not an expert, and I don't want to talk about it, but I do see a lot of headwinds for the US economy. That is getting recognized as the stalwarts experts talk about it. And that for me will lead to a weakened dollar and will also lead to money moving from DM to EM, where I think India will be a big beneficiary of it. At the same time, we saw a strong corporate announcement from Bajaj Group, where they have bought out the stakes of Alliance Group in their AMC and insurance business. We saw similar things done by various corporates in the past. It just shows the strength of the Indian corporates that they have learned the tricks of the trade and they are capable and confident of running the business at the same scale without a foreign JV. It's a good thing. Kotak did it decades back. JM did it. Bajaj has done it. Just shows that we are moving from one scale to the other. Coming back, the important point which I want to highlight here is that we may go wrong in the short term, but our conviction and our work on the long term remains our strength. As we came out with a report on Friday in our reflection, where we highlighted and revisited or reflected upon our IT note, which we came out with in July. When we came out with the report, we said that over the next 2 years, we don't see earnings growth in IT, and we see IT not giving the kind of return they have given in the past, and hence one should go underweight, and we went zero weight on IT. For the next 2 months, we were looking on the wrong foot. IT index went up by 20%, Nifty was trailing, and the gap between that pair was increasing. But in the next 3 months, not only IT has given away that gain, rather it looks a lot weak now. Why? Because the recognition of the fact that US is probably economy is probably going to a stagnation, recession kind of a phase. And the exchange in this report highlighted that if that happens, then the discretionary spends get impacted. So far, the market is only factoring the lack of the visibility on the revenue. Market is yet to factor the impact of that on the margin and the impact of currency movement, adverse currency movement on the margins and the earnings of IT stock. So, so valuations are still not cheap in IT. Earning visibility is not very high. So we maintain our view that IT, please stay away from IT. Whatever IT went up is because of the concept of US economy growing and the fact that people wanted more defensive in the portfolio. But when you don't buy with a rational and when things go wrong, you see accelerated selling, like we saw in mid and small caps towards the earlier part of the year. I think we could see that same thing in IT, and I think a panic is there setting in. Coming back to our view on the markets, I think markets the worst is over until there's a major negative news. April earnings season should take us back to decent levels. The direction seems to be more of buy on dips now, and our technical desk did some analysis, rough analysis, and they said that 23,800 to 24,200 is the range where the market should consolidate, and a breakout above 24,200 could lead to a sharp uptake as the market does more than 50% retracement of the fall which happened in the last 6 months. Now, if I increase the time horizon and I take it from where the rally started, I think the rally started for us at 18,000 a year or and more than a year back actually, uh, 18 months back. And if 18,000 to 26,000 something where we made the top, the 8,000 point of movement, the 50% retracement also comes to the level where from where we whipsawed, which means the technical parameter at this point of time is saying that the worst is over. And hence, the market for me will now become a buy on tip market rather than a sell at all levels. And once that happens, once the sentiment stabilizes, we will see a lot of good money flowing into the market. And this money will flow where there is earnings. And that is where Sanora focus is purely on earnings with the concept of that the earnings driven stocks will do well. And we are very proudly see that we have recovered all of the losses which we had in the first 2 months because of the market falling, which gives me at least a broad smile that I am able to deliver to the expectations of my clients that when markets are good, we make good money for them. What to expect this week? Until in the absence of a negative news, I think market is heading slowly to 23,800. Would like it to consolidate from here to 23,800 without a daily 200 point up move. That kind of volatility means the steady money doesn't come back to the market. And the faster we fall, the faster we go up, faster we go up, the faster the risk of falling. And I think consolidation and a slow movement is something which is good for a, a, someone like us who love to do stock picking and not a directional move on the market. Outperformance only increases when the market consolidates because the good stocks get rewarded more. That's fairly where I will end this conversation today. As usual, we'll wait for a couple of minutes for any questions on the chat or on my WhatsApp. Happy to answer it. No more questions. Let's end the session. Have a good weekend. Enjoy the Sunday. And let's hope for a good week ahead for us. Thank you, guys. Pleasure talking to you.